Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now back home on the Lord Street, the markets ended higher with the key indices at record closing highs. The Nifty added about 80 points yesterday. It ended above the 11,500 mark for the first time ever. The Sensex as well hit a triple century. That in fact closed above that 38,300 odd mark. The mid-caps, they gained in line with frontliners, though the mid-cap index put on 150 points to close over 3-month highs. The Nifty Bank as well participated. That hit 150 points in yesterday's trading session. Well, Anisha, yesterday things looked good. Today, how's trade set up?
Well, the trade setup is a bit mixed, Nigel. Yesterday, as you mentioned, we saw a strong rally when it comes to the Indian markets. The Nifty almost hit a century intraday when we look at the intraday chart, but it ended at above the 11,550 mark. And the key stocks like Reliance, L&T, as well as the HDFC Twins is actually what contributed to the Nifty gains. On the flip side, however, of course, Infosys was putting a bit of pressure, added around 22 points on the downside actually to the Nifty. But the good news was that the overall move in the market was a bit secular. The mid-cap index also rallied around 150 points. Now that one is sitting at a 3-month high right now. But we did see some profit booking when it comes to the FIIs because they sold around 483 crores in the cash market yesterday, while the DIIs, they continue to pump in money. They bought around 600 crores in the cash markets and equities yesterday. But if you're looking for cues for today, well, yes, the US market did end in the green. Stocks like Nike and Netflix were doing well, while Facebook was coming under a bit of pressure. We have been talking about how S&P 500 is just half a 0.6% away from the record high levels. But all eyes in the US market right now concerned and are looking forward to the US-China trade talk, which is happening this week. It is a mid-level talk, and President Donald Trump has said that he's not expecting much from this particular trade talk. But the expectation is that maybe they will discuss about the impending meeting that the street is talking about with Xi Jinping in November. Also, there's an expectation that in the interim, maybe new tariffs will not come by, and that's the reason the street is watching out for that. But other than that, other important comments also came out from President Donald Trump regarding the interest rates, and we saw the impact on currency as well. Now, we told you how he said that he was not thrilled with the Fed chair's decision for raising interest rate, and that is one thing to watch out for today. Other than that, the European markets also ended in the green. In fact, the German index, as we were talking about, was the outperformer, up around 1%. The peripheral markets also pretty much ended in the black. Other than that, for local cues today, there's not much to work around with. Just keep an eye out on crude because that one was showing a tad bit of pullback. That one was above the $70 mark the last time we checked. Rupee as well yesterday reported the biggest single session rise against the dollar. It showed some strength and ended at around 69.82. We are seeing some strength in dollar as well. So important to see how this one works out. But Nigel, other than that, I think the cues for today are mixed, especially with the holiday tomorrow. Maybe we'll see a bit of consolidation in trade today.
Okay, all right. So we'll keep an eye out on all those cues, but tell us about stocks. What should we be looking at in today's trading session?
Well, Jet Airways has been in focus ever since we have heard a lot of reports and speculations around that counter. Now we understand that ROC has actually initiated a preliminary inquiry against Jet Airways. So this is an important story to track. Maybe that stock will be under a bit of pressure today. Bank of Baroda will be in focus because exclusive sources to CNBC TV18 tell that PS Jayakumar is likely to see an extension as the MD and CEO of Bank of Baroda. So some stability coming there, a tad bit of green tick there. Apollo Tyres, they told that at a couple of their plants, of course, the production is disrupted of around 1,500 million tons, but they do not see any impact on the P&L given they have insurance for the losses. And that is the case with other Kerala-based companies as well. Yesterday, we saw that they were coming under a bit of pressure. Important and interesting to see how they react today. Reliance Infrastructure will be in focus because Anil Ambani has actually written a letter to Rahul Gandhi on the Rafale deal. We know how Rahul Gandhi has been raising questions regarding the deal with Rafale. So this might just keep the stock in focus a bit. NR Agarwal will be in focus because they have seen a temporary shutdown at one of their plants for annual maintenance. CG Power, positive news there because they're opening up another facility in Indonesia. That is in a joint venture that they have. HCL Tech will be in focus because they have introduced another artificial intelligence powered automation platform. So So that is one new product coming from the company. GMC Project has a board meet on August 24th, and they'll be considering issuing NCDs, that is non-convertible debentures. So that will be in focus. ILFS Transport, there has been some revision in the rating, so keep an eye out on that. And FDC Limited, there has been inspection by the authorities there, and US FDA has made 8 observations. It's interesting to see how that one reacts as well, Nigel.
Okay, all right. Thanks so much for that, Anish. Well, a panel of economists and government officials called the Committee on Real Sector Statistics presented its report late last week, and it basically gave the back series GDP figures as per the new base year, that's 2010-11. According to this report, the average growth rate during the UPA1 was around 8.4%, and the average growth during UPA2 was around 7.7%. Now you compare this to the current Modi government, under which the average growth rate is around 7.3%. Now the government has called the report experimental and not official. Lata Venkatesh caught up with the author of this report, Mr. Sudipto Munde, who says that the report should not be given a political color.
Would you agree that these 10 years, 2003 to 2013-14, seems to be the golden period, all caveats notwithstanding?
Yeah, Lata, first let me set the perspective right. You know, when we were doing these, generating this back series, the last thing in our mind was to compare what journalists like to do, this, you know, the BJP, this NDA period versus UPA period and so on. We did not even look at all this. Our job was to connect 2 series of both prepared by MOSPI, CSO, but without a comparable back series, which was compromising any attempt at reasonable scientific analysis. So our job was to do a professional one of producing it, the back series, and it is a collateral thing that has now come out, and which is what everybody is focused on, about higher growth rate, and that, as you said, in UPA 10 years rather than compared to the NDA period afterwards and so on. So that's it. And the numbers are what they are, and that's what they say.
No, I'm not imputing any political motives to your report, Professor. And I know, having been in previous finance commissions, that you remained just faithful to data and did what you were asked to do. I'm not imputing motives at all, sir. But I'm just asking you whether, that 10-year period of 8%, let's first break them into 2 periods of 5. The first half, 2003 to 2008, also coincides with a golden period of global growth. So do you think it was largely the global tailwind and not really much that India did right? Or if you wear your economist's hat, do you think that something was going right in India as well?
No, I think that 2 things happened, and now I'm purely speaking of memory, because so far we are only looking at numbers and not at the underlying political background, economic policy background and so on. But you're quite right, by that time, global growth had started, moving very fast. And together with that, you got some of the, the major effects of the reform which had been started way back in, 1991, having kicked in by then. And you did get a period of very high growth, which then ended with the crisis of 2008, which is also an external thing driven externally.
Okay. So with the benefit of hindsight, would you say that when global growth was not obliging after 2008, in fact, it was a huge drag, was it on hindsight a seminal mistake to have boosted the economy through fiscal deficits and perhaps even very easy monetary policy? I remember 2008, 2009, 2010, on a daily basis, the average reverse repo money that came to the Reserve Bank would be as high as 1 lakh crore, 2 lakh crore. Was it too loose monetary policy and too loose fiscal policy on hindsight?
Listen, first of all, in principle, not just in India, but all over the world, there was, as you know, monetary easing as well as fiscal stimulus in order to get the economy, of the global economy I'm saying, to get it out of the worst, great recession since the depression of the 90s. So it was not an India-specific thing to do this fiscal stimulus or monetary easing. That being said, in the case of each country, it had to be calibrated based on its, very specific situation. And India actually came bounced back fairly quickly, as did China, in fact, compared to a number of other advanced economies and other emerging market economies. As for the fine thing, I don't even remember what the numbers were of the exact, pace of expansion of, money supply and so on. It's a long time ago. So unless I look at those, I cannot be more specific than this.
Well, Lata also caught up with the former Deputy Chairman of the Planning Commission, Mr. Montek Singh Ahluwalia, to discuss the GDP back series report. He said that economic growth was much faster under the UPA governments.
The deficit going up in 2008, 2009
Yes.
was a conscious reaction to the threat of a global recession. Okay? You can argue whether we should have done it or not done it. But believe me, at that time, when the whole world was teetering on the brink of a recession, when the heads of government of 20 countries had got together in October or something to create the G20 at the summit level,
Yes.
where everybody was saying we need fiscal stimulus and monetary stimulus, it would have been madness not to have a stimulus. So talking mindlessly about high deficit without recognizing that the high deficit is in response to a truly exceptional situation doesn't make sense. Now, secondly, you say the next year was not a crisis year. Listen, 2008, 2009, if you look at the global position, growth rate in 2008, 2009 was negative. I mean, when you get a crisis in September, Lehman Brothers collapses, the spread of contagion, the choking off of credit, the appreciation that you've got a serious problem, this took a couple of months. So the idea that 2009-10 was not a crisis, I don't buy that. It was a crisis. You can argue, legitimately I think,
Yes.
that maybe we should have tailed off the fiscal stimulus a little faster than we did. That's true.
Much faster, isn't it?
You can argue that. I mean, when you say much faster...
So
all these things are matters of-
5.9% in 11-12. That comes on the back of a previous year growth of 10.8%, and 11-12 itself, it's a 7% GDP. I mean, 5.9 is pretty unpardonable, isn't it?
I don't... well, look, those are... What happens to a fiscal deficit at any given time is essentially a judgment that the finance ministry has to make. In that particular case, what really happened was that there was a decline in revenues. And you have a difficult... you can have two different views. That is, when you're getting off the high deficit regime, how fast do you do it?
Yeah.
I agree. Even the government then did try to get off it. What you're saying is they should have done it faster. On the whole, I agree with that. But, you're now talking about the last 2 years.
Yes.
So when you're looking at the performance of a government which has been there for 10 years, and, to my mind, yes, the last 2 years there were problems. Look, we said that ourselves, that there were problems.
Yes.
But take a government as a whole, it's a pretty damn good record. As a matter of fact, except for China during that period, that whole period, India was the fastest growing economy. And in the immediate aftermath of the crisis, I mean, let me tell you that the IMF had done a report on India in the year 2009. Okay? And the IMF had said that, look, you've slowed down in 2008, 2009. We are projecting that you will slow down further in 2008, 2009. Actually, we recovered.
Yes.
So the question is, would it have been better to slow down further, or would it have been better to make sure that you can put the economy back on a recovery path?